and investors. Today, we've got an exciting deep dive into the top dividend-paying stocks in Bill Gates' portfolio. As we know, the co-founder of Microsoft has not only shaped the tech industry but has also built a diversified portfolio through the Bill and Melinda Gates Foundation. So, buckle up as we explore the top 6 dividend stocks that make up a significant portion of Bill Gates' investment strategy. Segment 1. Microsoft, the tech giant. Host. First on our list is none other than Microsoft, the tech giant that Bill Gates co-founded. With a current share price of $374, Microsoft comprises a whopping 31.8% of Bill's entire portfolio. Holding over 39 million shares, valued at over $14.7 billion. Microsoft pays out a substantial $117 million in annual dividends. Host. Now, let's dive into Microsoft's dividend history. Despite a current yield below 1%, the real magic lies in the consistent dividend growth. Over the past 10 years, Microsoft has increased its dividend payments steadily, from 23 cents per share to an impressive 75 cents per share every quarter. The growth rates are equally impressive, with 3-year, 5-year, and 10-year rates exceeding 10%. Host. Checking the safety of these dividends. Microsoft boasts a healthy cash flow payout ratio of 20%, ensuring the sustainability of its dividend payments. As we peek into the balance sheet, we see a strategic reduction in long-term debt and an outstanding record of share buybacks, rewarding shareholders effectively. Host. Utilizing valuation models, the discounted cash flow analysis suggests a price per share of $327, while the dividend discount model indicates $433. Analysts also have a target price of $452. Considering these factors, it seems like Microsoft remains a cornerstone in Bill Gates' dividend portfolio. Segment 2. Berkshire Hathaway, a non-dividend player. Host. The second largest holding in Bill Gates' portfolio is Berkshire Hathaway, Warren Buffett's conglomerate. Despite not paying dividends, it holds a significant $8 billion value, making up 2.28% of Bill's entire portfolio. With a close relationship between Gates and Buffett, this investment comes as no surprise. Host. Boasting returns of 213% over the past decade and 78.85% in the last 5 years. Berkshire Hathaway aligns with Gates' long-term investment philosophy. While it doesn't contribute to dividend income, its presence in the portfolio reflects a strategic diversification strategy. Segment 3. Canadian National Railway dividend growth. Host. Moving on to the third largest holding, we find Canadian National Railway, NE. Comprising over 15% of the portfolio, CNI holds a value of $6.5 billion, paying out a substantial $127 million in annual dividends. Host. With a dividend yield of 1.95%, CNI exhibits a robust history of dividend growth. Over the past decade, quarterly payments have risen from 21 cents to 58 cents per share. Impressive growth rates of 20.1%, 11%, and 11% for the 3-year, 5-year, and 10-year periods respectively indicate a strong dividend strategy. Host. Checking the safety, the cash flow payout ratio of around 30% assures investors of sustainable dividend payments. Valuation models suggest a fair value, with the discounted cash flow model at $14 per share and the multiples valuation at $118.11. Meanwhile, the dividend discount model indicates $123.60 per share. Segment 4. Waste Management Sustainable Dividends. Host. The fourth largest position in Bill Gates' portfolio is Waste Management, WM, making up 13.8% with a total value of $6.3 billion. With over 35 million shares, it pays out over $98 million in annual dividends. Host. Waste Management, with a year-over-year increase of 7.38% and a year-to-date increase of 14.03%, has been a steady performer. Despite a starting dividend yield of 1.59%, the company exhibits a history of consistent dividend growth, increasing from 37 cents to 70 cents per share over the past decade. Host: a low cash flow payout ratio of 25% ensures dividend safety. Valuation models project a discounted cash flow price per share of $160, multiples valuation at $193.48, and a dividend discount model at $199.79. These figures suggest that Waste Management may be slightly undervalued. Segment 5: Caterpillar Growth and Volatility. Host: Caterpillar, CAT, claims the fifth spot in Gates' portfolio, making up 5.16% with a total value of $2 billion. With over 7.3 million shares, it pays out total dividends of over $38 million. Host: Caterpillar, exhibiting returns of 13.79% over the past year and 99.44% year-to-date, stands out. While its starting dividend yield is 2%, the company showcases a commendable history of dividend growth, increasing from 52 cents to $1.30 per share quarterly over the past decade. Host: maintaining a low cash flow payout ratio of 25%, Caterpillar continues the trend of dividend safety in Gates' portfolio. Valuation models project a discounted cash flow price per share of $254 and a dividend discount model price per share of $246.71. Segment 6: Deere & Company Dividend Growth Excellence. Host: the sixth largest holding is Deere & Company, DE, comprising 3.8% of the portfolio with a total value of $1.5 billion. With around 3.9 million shares, Deere & Company pays out almost $23 million in annual dividends. Host: despite a recent dip in stock performance, down 17.7% over the past year, Deere & Company has seen a solid 10-year dividend growth rate of 9.76%. With a starting yield of 1.64%, the company's dividend payments have recently surged, making it a noteworthy player in Gates' dividend strategy. Host: boasting an extremely low cash flow payout ratio of 8.85% for the trailing 12 months, Deere & Company seems well positioned for future dividend growth. Valuation models project an intrinsic value of $375 per share, aligning closely with the current trading price. Segment 7: Ecolab, the final dividend player. Host: wrapping up Bill Gates' dividend portfolio is Ecolab, ECL, making up 2.27% with a total value of over $1 billion. With around 5.2 million shares, Ecolab pays almost $12 million in annual dividends. Host: Ecolab has shown significant growth, up 27% over the past year and 34.84% year-to-date. Although its starting dividend yield is 1.18%, a recent 8% dividend hike signals positive prospects for income-seeking investors. Host: the cash flow payout ratio of 25% ensures the sustainability of Ecolab's dividend payments. Valuation models project an intrinsic value close to the current trading price, with the multiples valuation suggesting $140.90 per share and the dividend discount model indicating $195.62. Conclusion. Host: and there you have it, a comprehensive analysis of the top dividend-paying stocks in Bill Gates' portfolio. From the tech giant Microsoft to the growth-oriented Caterpillar and the dividend growth excellence of Waste Management and Canadian National Railway, each stock reflects Gates' strategic investment philosophy. Host: remember, these insights are not financial advice, and it's essential to conduct thorough research before making any investment decisions. If you enjoyed this deep dive, don't forget to like, subscribe, and hit the notification bell for more in-depth analyses of investment strategies.